Okay, this is Wednesday, March 19th, 2025, end of day MeBob review. Let's get right into the MeBob. I added this bar counting indicator just to make the review perhaps a little easier. So strictly speaking, using the MeBob rules as we've been using them, which means buy at the market with a close below, I'm sorry, sell short at the market, a close below, buy long, a close above. Profit target 10 points, stop loss. On the initial entry, we will use the opposite side of the MeBob range. Once the entry bar itself closes, we're going to use price action stops until we're stopped out or our profit target is filled. So first MeBob trade today was a short. This would have been the 14th bar of the day. So 6 bars after MeBob. If you were filled right at the close, you would have been filled somewhere around 57.04. You would have entered on this bar, and price did make the 10-point profit target. So you would have entered here when this bar closed, take that stop loss from all the way up here to one tick above the high of this bar. When this bar closed, we were still short, and your stop loss is now one tick above this bar, and then this bar would have filled your 10-point profit target. And if you watched the entirety of the live trading video today, you would know I did sell here, but I took a smaller profit. I'm just leery, even sim trading, I'm leery on FOMC days. I historically have not done well. Next MeBob opportunity was near the close of the MeBob session, but this happened at a time where you would have taken this long at the market. We're going to assume a fill of 14.5. I'm going to guess it would have probably been 14.75, but we're going to assume at the close profit target would have been 24 at even. It got to 23.25. I did post to the forum, the PriceBob forum at this time, that price was close to that 10-point profit target, and at this point I would move my stop up to probably about plus 5 points. That's where I would have been stopped out. If you were strictly doing price action stops, you would have been stopped out on bar 33 when it traded one tick below the low of bar 32, so your stop loss would have been 16.5. So 2-point profit here, 10 points here, 12 points gross for MeBob today. And let's see. Now, it was FOMC day. That kind of made things a little strange from a price action perspective, because here you had a wedge. I think that, push up, push up, push, 3 pushes. Even though the news bar came down below the low of the third push, I think this sort of forecast that this move was likely to happen. So then we had the news bar. They pegged the high right about the high of yesterday, but then we had a shooter. This type of doji I call a shooter. I didn't make that up, but I don't remember where I got that term from. I've been using it for 15 years. Maybe it's a candlestick term, I don't know. A shooter is an inside bar doji that becomes a long entry. So this would have been a buy stop above here. Again, afternoon, price action only, 10-point long here. If you did take a short here at 10.75, you would have been stopped out at 13.5, and you would have reversed to long, and you would have lost let's call it 4 points and then a 10-point profit target. Inside bar here, I'm not bracketing this with the long and the short. We're back above the previous day's high. I need to close below the high and then sell stop below the low of that bar that closed below. But I would put a buy stop here, enter at 23.75, would have been filled when you're 10 points here. And here you could have gotten long anywhere here. So you bought long here, you could have added another contract here, and you could have taken your 10-point profit target from here and moved it up another 10 points, because this is just buy set up, and at this point you should be thinking we're targeting last week's high. This was last week's high, broke above, closed above, tempted follow through, broke below, closed below, sell stop below this bar, or sell stop below this bar, 10-point profit. This point you're at 330. If you did take this, I'm not taking anything else. And if you stopped up here, I don't blame you. See, what did I want to point out here? In here, this is the MeBob region, but we do have an OI. I would not have put a buy stop above here. I would have had a buy stop above the MeBob or above this inside bar if I were looking to potentially get long. But what I do notice, and this is a pretty common pattern, OII triggers a trade for anyone who would have put their buy stop above this inside bar, and it fails. That's oftentimes, in this case, a good short. Had another one over here, OII, if you had done a buy stop. And here, I would have put a buy stop above this, the second inside bar or this inside bar, because now we've broken out, we've closed above the previous high of the day. I'm really thinking we get a little more continuation. We didn't. Another failed OII. Again, sell stop below here. So if I were long at 20 even, I'm getting stopped out at 16 and a half. So about 3.5 point loss. But I'm also going to be getting short, and you will get to a 10-point profit. Low is 16. 10 points filled down here. Dubious that I would have stayed short that whole time. We're afternoon, we're between 12 and 1. I'm probably not doing another stop and reverse, but I'm going to probably quit the trade somewhere in here, maybe even just take my profit with a limit order at the previous day's high, which was 57.11 and a quarter. So short at 16.50, out at 11.25, and then we have this. And again, any normal day, buy stop above these inside bars. I actually do know this would have worked. A buy stop above here is actually filled, I believe, first for your profit target. And then I think price came down because I sim traded here. So that's that. Now, briefly want to show 3 charts here, all the same. So this is the MeBob chart. Now, I'm not going to keep these numbers on while I'm trading. I'm just using these to help me with the do the review. But this is the chart with the moving average. And, I wanted to explain this. I should have done it first. So, well, I did. If you had gotten short here, you would have gotten long above here. And the point I wanted to make is this. some people who trade have a moving average are going to say, well, this is a buy signal, buy stop above, because price was supported by the 20 moving average, exponential moving average. That's BS. Price is supported by the activity of buyers and sellers. There are so many buyers and sellers out there. You can't claim that there's an indicator out there that was the cause of the preponderance of buyers to get long and sellers to give up to force price higher. Okay? Another thing you can look at here is, let's look at fibs. I'm not a fib guy, but I knew that this was going to probably be a retrace to the 38.2. I knew it wasn't quite halfway. Some people will say, well, price rallied because it retraced to the 38.2. Again, BS. Price rallies because there's greater demand for stock than there is supply of sellers who want to get rid of their stock. That's it. And that's why trading on price alone works. And the purpose of this thread is to explore if it doesn't work better than any batch of indicators you can think to put together. So if I were looking for an indicator, and I did remove this 20 EMA, this is going to be my trading chart. And after some of the posts today in the thread, I realized that by putting this here, it just tempts all the the people who think you can outsmart the law of large numbers, outsmart the market. They think there's some magical indicator or combination of indicators that's going to prevent them from taking losing trades. Again, BS. And I know it's BS because I did that for years and years and years and years. And it was only when I experienced the roulette epiphany that I realized that trying not to lose was causing me to lose more often and not win as often as I should win. And basically this mania we all seem to have to avoid taking losing trades rather than accepting that losing trades are the part of any edge prevents most retail traders from succeeding. Most, I believe, come to this thinking, wouldn't it be great if I can make a living day trading the market? Especially if I could just do it for a couple of hours, maybe the morning trading the open, or wait till after the lunch hour trading the afternoon. But we don't like to lose, and so as a result, we bounce from system to system, method to method, market to market, from 5-minute to 30-minute to 4181 volume to 8 tick to Renko to Heiken to Shi. We just keep bouncing around trying not to lose, and it basically all but assures you're going to lose. You're going to be a loser. So don't be a loser. So I'm going to take the EMA off of the chart, and once I'm done this video, I'm going to do it actually right now. I'm going to click on bar counter, turn off visible, turn that off so tomorrow I can trade, and then when I do the review for tomorrow, I can put the numbers back on. But this 20 EMA is not why price rallied here, sold off here. The price sold off here because you finally had a bear bar closing on its low, and this was an even better signal to sell. And that's indicating supply and demand. And then if I'm going to use an indicator for trading by price, it's going to be something like what I'm going to show you here. These are inside bars. It's a simple little indicator, and it just turns the bar blue if it's an inside bar. It's just a visual alert, and I wouldn't make this my only chart. I would use this chart, and if I wanted this, I would do so only if I had more than one monitor, so I could keep this chart over here. So keep this chart on the monitor that's to my right, and then I would keep this one. This monitor is the monitor right in front of me. That's how I would do that. But you do not need indicators. You do not need to filter your trades. There's not one indicator, for example, that's going to consistently get you long down here, which is exactly what price action would do. There's not one indicator that's going to consistently tell you that if you're long up here, you should get flat or even get short. The only indicator that's going to be as quick can be and get you in at the best risk-reward profile you can possibly enter a position is trading by price. It is the only thing. MACD will not do it for you. The 8 EMA channel will not do it for you. The 20-period exponential moving average will not do it for you. Now, does that mean you shouldn't use those? It's up to you. They can certainly be used to define context or define setups. And if that's what you want to do, that's great. But don't do it in the price pop thread. That's all. I'm not anti-indicator. But if I'm going to spend this much time in a thread at Forex Factory exploring how to define setups based on price alone, I don't want to have to constantly be policing the thread to dispel the attempts of people who want to avoid losses at all cost, so they insist on bringing in this wrong-headed and, in my view, damaging concept of trying to, quote-unquote, filter trade entries. And I'm not even saying it can't be done, because it can be done. It's just a matter of deciding arbitrarily that I'm going to have so much belief and faith in the power of the 20-period exponential moving average that I will only take long trades if price is above, and I will only take short trades if price is below. Problem with that, one of the best long entries of the day occurred over here while price was below, and two of the best short entries, one was here with price above and over here with price well above. So what are you going to do? Who are you going to believe? Price or your own lying eyes? And that's it. I didn't want to go this long. This is about 20 minutes. I'm trying to keep these things to around 12 to 15, but I did want to cover that today. So this is as close to a naked chart as I get. I'm going to use these pivot levels. These are basically superimposing the previous daily bar and the previous weekly bar on top of my 5-minute chart without having to actually have all that mess that an overlay indicator would create. And then here's the same chart, just adding in the moving average. And look, I'm not going to say it's not a visual aid, but you got to leave it at that. You can't make it a filter to somehow prevent you from losing trades. You're going to lose far more opportunity by being tricked out of opportunities than by using it as some sort of misguided filter. If you're going to use indicators that highlight the MeBob bar. Maybe an opening range indicator. And it could be a 5-minute opening range. I don't care if you use a 15 or a 30, so long as you're in the thread, so long as you would be defining your setups on the behavior of 5-minute bars. What else? I think that's it. Oh, and then something like this. If you want an indicator that highlights the inside bars, that's fine. I have no problem. It's a price action indicator. If you want an indicator that also highlights outside bars, again, I'm fine with that. That's a price action indicator. It's just a visual aid. Just like Al Brooks uses this 20-period exponential moving average, it's just a visual aid. It is not a filter tool. All right. I'm not going to be doing any more live trading videos until next week at the earliest. I will do a nightly MeBob review, but I have noticed, even today doing sim, I feel like I feel an obligation to fill the space with talk while I'm recording these lengthy live trade videos, and it really distracts me from paying attention the way I should. So I just don't think it's a good habit for me to get into, and I'm just going to do a review video. I might do 2 videos. I'm considering a real brief MeBob review where I just talk about the MeBob signals, where the stop loss goes, whether it was a profitable trade or a loss, and then cut it. Could probably do those in 5 minutes, and then do a longer video, maybe 15 minutes, where I start with the opening range bar and go through until 3 o'clock, and just highlight my view of how you would identify price action setups. But no live trading video tomorrow or Friday. I'll give it some thought over the weekend after I reflect on how tomorrow and Friday go for me. But again, I just think it's too distracting for me. I feel like I'm not as focused and engaged with my chart as I should be. And that's it. Have a good night.